Welcome to the Transparent FX Academy. In this video, I'll speak about EURUSD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment has just created a huge impulse to the upside. Now, this push to the upside from a monthly standpoint has been fueled by strong institutional buying of the euro against the USD. We will be speaking about the institutional positioning in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that the market has just surged with strong institutional buying and at the moment has started this correction. Now, as we know, this is the natural movement of a market. When we are in a strong uptrend, we expect the market to create a series of higher highs and higher lows. And that is the definition itself, actually, of an uptrend. So now that we had the impulse and the start of the correction, we can try to understand which is the first retracement level at which we could start to find some support. Now, an easy tool for that is the Fib retracement levels. Now, if we take our Fibonacci from the low to the high of the impulse leg, we can already understand that the most important retracement level in this case is the 0.382. Now, why it is the 0.382? Because if we take a box and extend it to the left, as I just did, basically, we can easily understand how the 0.382 is lining up perfectly with the previous level of resistance, which was acting as resistance all across this zone, and now that the market has broken it to the upside, is acting as support. So what we actually have at this level is confluence of demand and support, because we have the 0.32 with this previous horizontal resistance now turned support, which creates confluence of demand at this level, meaning that we have an increased probability of seeing institutional buying at that level. Dropping down on the weekly time frame, what do we see? Now, here in the weekly, it seems like the market has just failed continuing higher. The market created the impulse, the correction, tried going higher. However, in this case, it failed. The higher prices did not hold and the market immediately entered into a sell-off. However, we are still at the support. In fact, this level is an important structured zone. It was acting as previous resistance from here and here. Then the market broke above the level and that previous resistance became support here and here. And until the market will remain above this zone, it could easily reject higher. So what we need is a confirmed break below this support. Only if we get a weekly close below this area, only at that point, we have an increased probability of seeing more bearish pressure for the market to go all the way down and test the confluence of demand and support that we have previously identified on the monthly time frame. So it is important to see a weekly break below this zone. Dropping down on the daily time frame, we can notice that actually this level is respected quite precisely also on the daily time frame. It was acting as previous resistance here, again confirmed as resistance here, then the market broke above the zone, and as you already know, previous resistance, once it is broken to the upside, acts as support. The market here tested its zone and rejected it to the upside. And actually, I was speaking about EURUSD just a few days ago when the market was here, and I explained all the reasons for which I was expecting this rejection to the upside, which is in fact exactly what the market did. And by the way, I will link in the description that previous analysis, so you can go and check it out for more free education. But at the moment, what do we have? Well, at the moment, as we have already seen by looking at the weekly time frame, we have a market testing that exact same level of demand and support. So let's go and see what is going on when it comes to the institutional positioning inside of this level? Well, if we look at the data from the commitment of traders, so what the non-commercials in the market are doing, so the big institutions and the speculators, and we look at the data for the euro, the first thing that we have to keep in mind is that by looking at the data on the euro, we are already looking at euro USD because all currencies on the spot are traded against the USD. And what we can see here is that now, for the first time after many months in which net positions were continuing to get increased, going from minus 64.4K. So we had a negative net positioning, meaning that institutions had more shorts than longs on Euro USD. They had 230,000 shorts compared to 165,000 longs. Now we reached 128K net positions at the peak with the complete opposite. So more longs than shorts from an institutional perspective, 242,000 longs compared to only 113,000 shorts. And all this surge in net positions and institutional buying is clearly reflected in the price action throughout these months, because we can notice how we had this huge push to the upside fueled by all that institutional longing. And what we can see right now is that we are now starting to see again the start potentially of a decrease in net positions, because now we went from 128.2K, which was the peak. We now started to decrease. We are now at 125.5K. So what we're starting to see is that shorts are starting to get added. We see 8,900 shorts getting added. We still don't see longs getting closed. Longs are still getting added. So what is important to do right now is, in my opinion, to wait and see what is going to go on at this demand and support zone. Because as institutions are still buying, there is definitely the possibility of seeing a rejection to the upside again away from this level, and this push lower to actually just be a retest of this demand and support zone. Only if the market will manage to break below that zone, only at that point things get interesting, because after a break, this previous support will become resistance, and after the break on the retest of the previous support and resistance, that is where there is good probabilities, in my opinion, to see more institutional shorting, further increasing the probabilities of a potential push lower below the level. So if we will see this break and retest, what will I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to bearish market, I wouldn't be surprised to see a potential push lower below the level for the market to complete this daily impulse correction and impulse pattern to the downside. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.